Coming up on Market to Market, Midwest governors seek flood plans in the plains. The administration juggles multiple trade deals. From weighing shed to analyst chair, remembering Walt Hackney. And market analysis with Tomm Pfitzenmaier next.
Hit pretty hard. South America's even.
Pioneer Hybrid International is a proud sponsor of Market to Market. Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today. This is the Friday, April 5 edition of Market to Market, the weekly journal of rural America.
Hello, I'm Delaney Howell. Some financial experts predict the global economy will be slowing in the coming months. Apparently, no one told the economy. According to the Labor Department, 196,000 jobs were created last month, a major bump after February's report. The unemployment rate held steady at 3.8%. While orders for big-ticket items fell in February, the bigger picture has a different story. Over the past 12 months, the less volatile orders for core durable goods have risen 2.6%. Creighton's Mid-America Business Conditions Index showed economic growth in March despite recent flooding and limited movement with trade talks. Communities hard hit by flooding are still sorting through what's left. Damage estimates have climbed over $2 billion in Iowa alone. Not willing to sit back and wait, government officials are making plans for what's next. Peter Tubbs reports.
While the flooded Missouri River continues to block roads and inundate farmland, the plans for repairs to dikes has begun, and long-term questions are being asked. The governors of Missouri, Nebraska, and Iowa met in Council Bluffs, Iowa this week and pledged to work as a team when the U.S. Corps of Engineers begins repairing flood damage. The group also plans to keep the team together as they join the Corps to look at strategies for preventing future floods.
We're going to be working together as neighbor states to try to figure out how we move forward and what are the things that we can do to change. But one thing is evident, something needs to change. We can't do the same old thing we've been doing, and we just can't meet about it. We got to focus on doing something.
Iowa Governor Kim Reynolds called for the Corps to shift their focus away from general river management and return flood prevention to the top of their priority list.
But the number one priority needs to be flood management and people. And so as we look for managing the river, those are some of the things that's what they should be focusing on.
Nebraska Governor Pete Ricketts believes the permitting process to repair damaged dikes needs to be streamlined.
But we want the Corps to work collaboratively with the Corps to figure out what we need to do to be able to make sure that, again, this does not repeat.
Forecasters expect flooding to continue along the Missouri River for the foreseeable future. From Market to Market, I'm Peter Tubbs.
The U.S. fought trade battles on multiple fronts this week. The contentious issues of intellectual property theft and tariffs on everything from steel to ginseng remain at the forefront. Paul Yeager has more.
The president's threat to shut down the border crossing with Mexico on immigration spilled over into trade relations between the two countries. Several U.S. producers rely on the nation's number 3 trading partner for a good share of their business. For U.S. dairy producers, Mexico is their largest export market. The USMCA, the president's answer to NAFTA, was agreed to in principle back in September. So far, none of the players have ratified the deal. Senator Charles Grassley said this week he met with the president last week to, again, make the case for lifting sanctions against USMCA countries in an effort to get a deal done.
He said that he put them on, those tariffs on, so Mexico and Canada would negotiate. Well, Canada and Mexico negotiated. Even the president says he has a good trade agreement. So guess what? I say, since they negotiated in good faith, don't you think you should take the tariffs off? He said no.
U.S. trade representatives spent last week in China, and this week their counterparts came stateside, working out issues of intellectual property, agriculture, and the enforcement of trade agreement terms.
Thank you very much.
The Vice Premier of China met with the president in the White House Thursday afternoon in an effort to help end the trade stalemate between the two countries.
I think it's very important. We'll see if it happens. We've never done a deal like this with China, and it's a very unique set of circumstances, but it's a massive deal. Could be one of the, I guess it is if you think about it, the biggest deal ever made.
Also in China last week, a delegation led by the Iowa Soybean Association. Tim Bardole, a fifth-generation producer from central Iowa, was on the trip and said the Chinese people he talked to last week are interested in making a deal that would allow U.S. soybeans into their country.
It was unanimous on both sides of the table in every meeting. We got to get this fixed because we as U.S. farmers want to be doing business with them, and they made it very clear that China wants to do business with us.
The talks between the two nations are expected to fill the rest of April. For Market to Market, I'm Paul Yeager.
Next, the Market to Market report.
Planning delays and the potential for a major trade deal was a rising tide that lifted all boats. For the week, May wheat gained 10 cents, while the nearby corn contract rose 6 cents. A combination of good export sales and a glimmer of hope there would be a U.S.-China trade agreement helped push the May soybean contract 15 cents higher. May meal improved $1.50 per ton. May cotton expanded higher by 64 cents per hundredweight. Over in the dairy parlor, May Class 3 milk futures added 29 cents. The livestock market was swept up in the optimism for a trade deal. June cattle added $1.35. May feeders put on $1.45, and the June lean hog contract rebounded with a $10.43 gain. In the currency markets, the U.S. dollar index rose 18 ticks. May crude oil jumped $2.98 per barrel. COMEX gold dropped $1 per ounce, and the Goldman Sachs commodity index improved 14 points to finish at 447.60. Joining us now to offer insight on these and other trends is one of our regular market analysts, Tomm Pfitzenmaier. Tom, welcome back.
Thanks, Delaney.
Tom, we used this line last week. I'm going to use it on you too. Give me your quick tweet thoughts, 180 characters of Tuesday's report.
Of the upcoming report.
Tuesday report.
I'm assuming that very quickly we're probably going to see they're going to incorporate the stocks numbers, probably going to adjust a little bit on the demand side. Expecting a carry out in corn around $2 billion. Beans, I don't think they're going to change much. Maybe bump it a little somewhere either side of 900 for bean carry out. Those are going to be the main numbers. I assume they're going to bump the Argentine and Brazilian corn crops a little bit. Probably leave soybeans the same for those two countries. Any reason then to see volatility added from Tuesday's report? Should we be making any sales before or after that report? Well, certainly if we rally into the report, I think you use any rallies to make sales. I don't expect a lot to happen. The report's Tuesday morning, so we only have one day basically to trade, and I don't expect a lot to happen. Okay, maybe a neutral report this time around. Probably. Okay. Yeah. Tom, let's talk about export sales because we had exciting weeks in wheat, corn, and soybeans, maybe for different reasons. In the wheat pits, however, we had the largest volume purchased since July of 2013. I asked it last week on the show, and it's, 1 week doesn't make a market, but are exports changing pace for the wheat markets? I don't think so. I mean, obviously that's a good number, and occasionally you're going to have that, but everybody in the world, somebody's harvesting wheat once every month. Somebody new is. The crop condition rating on wheat came in better than they were expecting last week. I'm assuming it's probably going to be pretty decent when it comes out Monday again. So I mean, wheat's probably got some upside potential, like you said in your lead-in. We had a little bounce this week, but I guess I don't expect that to go far. And certainly it's probably going to be an anchored a bit by corn if something doesn't start improving there. And when you say upside potential, how much upside potential are we talking? 10 cents? 20 cents, 20 maybe. Cents? Yeah. Okay, let's talk about the export sales in corn this week. Not such a pretty picture. The lowest number in over 4 years this week. Why did we see such low export sales? Well, South America's got corn. There's some Brazilian corn. The Argentine crop's about, well, last week it was about almost 20% harvested. They get up to 40, 50% harvested, and then those doors get opened up pretty wide, and they're undercutting us substantially in the June, July time period. So we keep, all winter long we were ahead of last year, but we tend to forget that last year when it became apparent that the Argentine and Brazilian crops were not going to be very good, then our exports took off. Well, it's the opposite of that this year, and unless we get some Chinese business that we are kind of hoping for, the corn market's going to struggle because ethanol demand hasn't, corn use for ethanol hasn't been good, and feed usage we wonder about. After that stocks report, everybody's a little confused about that. You would think livestock numbers being up, demand would have been a little better than it is, but I don't expect the USDA to make any changes on the feed side in this report coming up Tuesday.
You mentioned the U.S.-Chinese trade talks. We heard a lot of news, or maybe non-news this week. 4 weeks out maybe is the earliest we'll see some sort of soft agreement in place here. But from a corn perspective, a lot of folks are speculating that we might see China agree to purchase U.S. corn. Tom, how much corn could China possibly need to purchase, and what kind of story do we need to see to make any sort of real impact in the corn markets?
Well, we don't know how much they need. The thing that haunts me about that is hogs have rallied. Well, in your lead-in, they were on fire the last month because of hog liquidation. Well, a lot of that corn goes to feed hog. Why do they need to buy any more than we're sort of forcing them to buy by this trade deal? The other thing about that is we don't know, is that going to be old crop, or is it going to be new crop? Is it going to be, I'm suspecting with this big Argentine and Brazilian crop hitting the market in June and July, if they do make purchases, it's probably going to be new crop, which leaves our carryout for old crop $2 billion plus probably. So I don't know. I'm getting tired of being drug around by it. If something comes along, I'm great. That's going to be wonderful. But boy, to bank your whole marketing program on that, which people have been doing for the last 6 months to their detriment, I don't know. It's getting a little old.
It is, absolutely. I think a lot of producers would agree with that too. We've got one quick question here from our Facebook page at IPTV Market. We've got Shane in Bloomfield, Nebraska, has got an interesting question here. He said, if 2019 brings above trendline yields, should we be selling 2020 and 2021 corn at 25% above $4 in anticipation of that huge carryout you're just talking about?
I don't know if I'd go out all the way out there, but boy, you take that December of 2020 corn and then you carry that out into July of 2021 and add some carry in there. You're locking in pretty decent prices and probably something you can live with. So I don't know that I'd be 100%, but I think you're crazy to not at least take a piece of that somehow and lock something in. I don't know what that means, 25%, 50%, whatever you're comfortable with, but I think when you get those kind of prices, you got to look at doing something. Yeah. That's the thing that's amazed me through the winter here. All these farmers are sitting with huge price risk. They're storing their crop, and none of them want to sell anything. And that's where their risk is to the downside. If what he alluded to, if we do have above trend line yields and we plant more acres like the USDA said, we're talking about a 2.5, 2.6 carry out again next year, which is, low threes maybe on corn. So why wouldn't you take some protection on that somehow? And if you think I'm completely full of baloney, use a put and leave your upside open if you want to.
Yeah, and I don't think the story is any brighter right now in the soybean markets. We got a little bit of positive trade optimism, but you did mention in your newsletter this week, I thought it was interesting and wanted to ask you about it. You said if we see a close above $9, it would certainly be positive for the psychology of the trade. Tom, we closed above $9, I think, on Thursday. Did that add any positive sentiment to the soybean markets?
Well, it closed right back under it on Friday.
I know.
So I'm not sure it meant a whole lot. You had the momentum and trend indicators turned up, and all of a sudden, after the way we closed Friday, that's starting to look a little suspect again. So I don't know. Yeah, how friendly you can get to beans, again depends on export sales and whether we do anything with China. Everybody was kind of excited about that export number Thursday, but almost all of that was sales previously announced to China.
Nothing new.
Okay. And you subtract that out of it, nobody else bought very many beans. So, and again, the South American crops coming on, they're going to take the market away from us. If we do push some acres to beans because of wet weather, that just adds to it. We're probably going to have, everybody says we're going to have an El Nino, which tends to give us better than average crops. Now, I know some people are a little on the wet side, and that makes them uneasy and makes them wonder if you can have above trend line yields in that situation, and probably some people won't. But I'd guess the vast majority is with good subsoil moisture, you're probably going to have above average yields.
Okay, Tom, let's finish the soybean and grains discussion on Market Plus. We got to talk about the feeder cattle, the live cattle, and the hog markets because they had some exciting weeks, starting with the live cattle market. Tom, I want to know, why is the April trading at such a premium right now to the deferred contract months?
Well, I mean, I think everybody thinks that well, number one, you had all these problems through the winter. January, February, and March were not kind to cattlemen. Weights were down, gains weren't very good, and I think that's created somewhat of a shortage of cattle in the short run. And in the meantime, you've had pretty darn good demand for beef. So I think that's helped support that front end. The deferreds are expecting that things are going to get back on track. You're going to start to bring the weights back. The numbers are coming. Demand is, is it going to be good or isn't? And I think that's kept the back months a little more depressed, I guess you'd say.
Let's save the feeder cattle discussion for Market Plus. We got to talk hog markets. $10 and I think 43 cents compared to last week in the June contract. However, the April contract closed lower today. Is that just expiration, or is there something else going on?
Something's going to have to get resolved because that April contract goes off the board pretty soon, and there's a huge disparity between that and the cash market. So somewhere, something's going to have to change in that situation, and that's going to be interesting over the next few days to see how that gets resolved. As far as the summer months, I think that's all expectations for China, which is we better sell some pork to China because there's a lot of optimism pumped. If that doesn't happen, and it hasn't happened to any great extent yet, if that doesn't happen, those things are way overpriced. It looks like to me. I mean, if you're a hog producer and you see those kind of prices, you better get at least a piece of that covered because those are pretty fancy hog prices.
Do you think China's just waiting to see some sort of trade deal so they lift tariffs and then will import a bunch of U.S. pork?
I don't know. What are they doing? I mean, do they necessarily necessarily have to feed their people pork? Can they substitute chicken? Can they say, well, tough, you're going to have to go without for a few months? We don't really know what their strategy is going to be on this. We're assuming they lose 1 million hogs, they're going to buy 1 million from us, and everything's going to be peachy for the U.S. pork producer. And I guess I'm not totally convinced that that's going to be the case, especially since they haven't bought anything to speak of yet.
Okay. All right. Before we go, I wanted to ask your opinion and your memory of Walt Hackney, who passed away earlier this week.
Well, Walt and I started doing the show about the same time. To anybody who doesn't know, I was a partner with Chet Randolph back when I started doing the show, and I remember Chet came in the office one day and he says, we got a real cattle guy coming to be on the show. And he says, he's going to be awesome, and he was. I mean, he was somebody that was actually out in the feedlot and knew what was going on. He had that gravelly voice that sort of gave him some credibility, and I tuned into the show when he was on just because he had the ground-based knowledge of what the heck was going on in the cattle industry, and it was always interesting to hear him talk about it.
Yeah, it was. I think he's going to be missed by a lot of people. Tom.
Yeah, absolutely.
Thank you for that. I know I actually got to meet Walt Hackney a couple times. We've had him on the program. I only got to have him one time with me on the program, but I got to actually go on a trip with Dave and meet Walt and see him doing his thing in action, so that was really neat. If you would like to send us your memories to share, you can hit us up on Facebook and Instagram at IPTV Market, on Twitter at Market to Market, or you can also email us those memories, Market to Market at iptv.org. Walt started on the show in 1983 and was a fixture of the program for more than 35 years. He was the analyst we relied on for a deep dive into the livestock market. His easy smile, vintage quips, and body of knowledge will be greatly missed. Our thoughts go out to Walt's wife of 58 and a half years, his 2 children, 7 grandchildren, 3 great-grandchildren, and the rest of the Hackney family. We leave you with a look from 2015 when executive producer David Miller joined Walt for a cattle buying trip in the Rockies.
In the rough and tumble world of cattle production, it takes a certain type of personality to handle the monetary risks of a volatile market and the often bigger-than-life personalities who buy those animals. From ranchers in the high plains to employees beyond the packing house door, few are able to fill those boots, but Walt Hackney makes the grade. Hackney has spent countless miles on the open road over the past 6 decades, traveling from auction barn to weighing shed, buying millions of cattle from New York to California. He remains one of the few who will purchase feeders for placement, negotiate futures contracts, and sell cattle directly to packers.
I'd like to think that there are others that are as deeply interested in protecting your client base as what I am. And I believe that there are out there doing it. It helps stabilize your market.
The day Hackney graduated from Oklahoma State University, he left for Ottumwa, Iowa, and his new job as a cattle buyer with the John Morrell Company. The trunk of his car was filled with a few pots and pans, some old clothes, and a well-worn saddle.
I had visions of standing on the lower boards of a corral, looking out over a herd of finished cattle, ready for a packer to buy them. Well, it just goes to show you how wrong you can be. That first morning, I signed in at the plant, and they gave me a pair of rubber boots and a fire hose, and they said your first job will be to go out and wash the manure out of the pens, and you keep washing them until you get ready to go home tonight.
After several months of working his way through every aspect of the production line, Hackney was put on the road buying cattle. Over the next few decades, he started a family, became a head cattle buyer for the XL Packing Company, formerly owned by meat industry giant Cargill, and in 1992, he opened Hackney Ag Associates, a full-service cattle buying and forward contracting operation. High in the Rocky Mountains, ranchers near the town of Colburn, Colorado, were having trouble making a profit on their cattle. The Colburn ranching community pushed Mike Ralston to the front of the pack to ask Hackney, who was buying cattle for National Farmer Feeders at the time, to purchase cattle from a pool of 25 producers.
Actually, I wasn't real sure when I first met him. We weren't, none of us real impressed with him, you know. You had to sort of warm up to him, and maybe he's mellowed out a little bit too, I don't know. But as a person, he's about as honest and straightforward. He gets along with everybody, which is important. What you see is what you get.
Today, cattlemen in the Colburn pool continue to feel like they're being treated fairly by the veteran buyer. Longtime friend Ed Warner clears the cattle through his Albia, Iowa-based Central States Cattle Company.
We've become to know Walt as a very honorable, very honest guy, and very big-hearted, and he is fair with everybody that he deals with. If there's any mistakes or any problems, Walt's probably going to be the one to take the bump.
Farther down the buying chain are producers like Bob Frist of Hubbard, Iowa. On a foggy fall morning, he's taking delivery of 480 head of cattle from the Rangeford, Montana pool. A few years ago, Frist sought out Hackney because he wanted the best cattle available.
It don't cost you any more to feed the good ones than it does the bad ones. Ever since Walt and I have gotten together, he's always did the best he could ever do for me. Not only for the producer out there, he gets the money for the producer, but he also makes us feel like we're getting a good buy on the cattle on this end.
When the cattle are ready in the high country, Hackney will be back in the saddle putting more miles on his car. His rounds will ultimately take him to Colburn, where he can look over the pool and sign a few checks.
Our industry is one of a few that you actually grow about as much in the hard times as you do in the good times. Hard times, you're forced to really wear out a number 2 lead pencil making it work. And so the hard times and the good times thrown together, I wouldn't want to change a thing.
For Market to Market, I'm David Miller.
Okay. Okay.
Market to Market is a production of Iowa Public Television, which is solely responsible for its content. Pioneer Hybrid International is a proud sponsor of Market to Market. Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today.